All right, JP Morgan just dropped their massive 2026 outlook, and if you're thinking about money in the economy, you need to hear this. We're going to break down the biggest takeaways, and trust me, it is not your typical market forecast. Let's dive in.
Right off the bat, the whole report is built around this one powerful idea. Forget about a simple bull versus bear market. What they're saying is that 2026 is going to be defined by a massive collision between two huge, opposing forces that are completely reshaping how we should think about investing.
And this is what that tension looks like, side by side. On one side, you have this incredible, almost unbelievable promise. We're talking massive growth potential, this AI supercycle, just so much opportunity. But on the other side, you've got some very real pressure, serious risks, a world that's kind of breaking apart into pieces, and inflation that just doesn't seem to want to go away. The report's big argument is that 2026 is the year where this all comes to a head.
So you have to ask, where is all this coming from? Is it just random? No, not at all. According to JP Morgan, this entire landscape of promise and pressure is being driven by three very specific and very powerful megatrends.
So think of these as the three main characters in the story of 2026. You've got artificial intelligence, of course, then you have something they call global fragmentation, and finally, persistent inflation. Each one of these is a powerhouse on its own, with its own set of opportunities and its own set of challenges.
So let's break these down, one by one, and we absolutely have to start with the one that's on everybody's mind, artificial intelligence. We're going to look at both the good and the not so good that it's bringing to the table. Now, JP Morgan uses a really specific term for what's happening with AI. They call it a capital market supercycle. What on earth does that mean? Well, it's their way of saying this is way bigger than just some flashy new tech. It's a fundamental, deep shift in the economy, a whole new engine that's about to supercharge productivity and profits in just about every industry you can imagine. And if you want to see the fuel for that engine, well, here it is. Just look at the amount of money being poured into AI. We are talking about a tidal wave of capital. And it's not slowing down. This is what's building all the data centers, funding the new software, everything. Okay, so that all sounds pretty great, right? A true engine of promise. But remember the other side of the coin? The pressure? This is where the report really pivots and asks the question we should all be asking. So what's the catch? What's the downside to all this incredible rapid growth? And here's the answer. First, so much of the market's success is tied up in just a handful of big AI stocks. That concentration creates a very real risk of a valuation bubble. Second, with all that money rushing in, there's a danger that we just build too much, overcapacity, which eventually leads to lower profits. The report is basically screaming, be selective. Don't just throw money at anything with AI in the name.
Now for megatrend number 2, and this one is a biggie. We are living through a massive shift away from the era of globalization that most of us grew up in. The world is being redrawn, and the new map looks completely different.
So what does fragmentation really mean in practice? Well, think of it like this. The world is breaking up into regional teams, each with its own interests and rules. And this isn't just about politics. It fundamentally changes supply chains, who trades with whom, and most importantly for us, it completely reshapes where and how investment money is going to flow.
And that leads to this absolutely critical piece of advice. In this new, fragmented world, the old rule of just spreading your money out across the globe, it's just not good enough anymore. Your diversification strategy has to be smarter, more targeted, and way more aware of these new regional dynamics.
And finally, our third megatrend, inflation. Now, I know what you might be thinking. Isn't that old news? Well, according to JP Morgan, the headlines might have cooled off, but the underlying pressures that cause inflation are still very much with us. They've just changed shape, and that makes inflation a quiet but persistent threat to your wealth.
So how do you handle it? The advice here is all about a shift in mindset. The game is less about chasing sky-high returns and more about actively protecting the purchasing power of the money you have. That means thinking about real assets, looking at strategies designed to be inflation-resistant, and keeping your focus on long-term value. Okay, so we've looked at these three huge forces by themselves, but the real secret sauce in this report is understanding what happens when they interact, when they crash into each other. It's right there, at that intersection, that a whole new investment frontier is opening up. This table does a great job of showing how these forces play together. For example, you take the AI boom and you smash it into a fragmenting world. Well, all of a sudden you start seeing new tech hubs pop up in unexpected places, far from Silicon Valley. Or you mix fragmentation with inflation, and you get sudden price shocks and supply chain problems in certain regions. It creates a much more complex world for sure, but that complexity also creates brand new opportunities.
So what does this all mean for you, right? Let's boil all this analysis down into a clear, actionable investor playbook with 3 key takeaways, straight from the report.
Here it is, your 3-part playbook. Number 1, diversify intelligently. And that means looking beyond just the handful of huge AI stocks that everyone's talking about. Number 2, think regionally. In a fragmented world, the best opportunities might not be where you'd normally expect them. And number 3, make a plan for inflation. It's a risk that's here to stay, so you need a strategy to protect your purchasing power. And that brings us to what might be the single most important message in the whole report. We have to stop thinking of promise and pressure as 2 opposing teams where one has to win. They're not. They're 2 sides of the same coin. They are the new reality, and our job isn't to predict which one will win, but to learn how to navigate a world where both are true at the same time.
So I'll leave you with this final question to think about. When you look at your own financial situation, your own strategy for the future, which of these 2 forces do you think will be stronger in 2026? The incredible promise of growth, or the undeniable pressure of all these new global challenges? Finding that balance, that's going to be the name of the game.